Welcome to Profiletraders. This is Reza and you're listening to my market analysis for Friday the 5th of June. These past several sessions, market has become a little bit under pressure due to several factors. Number one factor, we saw the first quarter economic growth to be negative. Number two factor, we are seeing this fake, phony, fraudulent, lying unemployment reports that is coming out showing us this silliness of a 5.4% unemployment, while 100 million people out of 350 million are out of the job market. You heard me, right? 100 million Americans are not working. And that is why our unemployment number is at 5.5%. It is not because our economy is booming. It is not because every single corporation out there is hiring. All the jobs that are created are toilet cleaning, window washing, floor sweeping, minimum wage paying, and you name it. So, with this phony baloney 5.5%, because the Federal Reserve is so incompetent and so clueless that they are now in complete panic mode, that they have created the nastiest stock market bubble in the history of mankind, and now they are kind of panicked as of what to do to stop it. So the choices are extremely dangerous. Choice number one, which is a complete fantasy and a wet dream of Mrs. Yellen, a wet dream of Mrs. Yellen, which is I'm gonna go hike the rates. What are you gonna go hike the rates, woman? The entire population spending is based on 0% financing. Your own balance sheet has been inflated by Mr. Bernanke in the tune of 10 to 12 trillion dollars. That little skinny pimp in the White House has added 9 trillion dollars to our debt. What are you gonna go do? Hike the rates? Who's gonna pay the servicing of these debts at a higher price? They're gonna collapse the economy if they hike the rates. So in one hand, they're talking about the rate hike nonsense, which is so ridiculous that even the IMF Friday sent them a letter saying do not touch the rates till the end of the year or the results can be catastrophic. So this is not the dilemma that we have. One, the Fed's gonna hike the rates, which has pressured the market. Two, we have a declining economic growth, which doesn't make any sense to hike the rates in such condition. So, market now is debating what to do. If the rate hike crap is a fantasy and a wet dream of this incompetent Yellen, then there is no rate hike and the market should continue the orgy to the upside. If they are truly these imbeciles that on the face of a very strong dollar, a shrinking economy, they are going to go ahead and hike the rates, then it's going to create a catastrophic event in the market. So now we are in a very nasty stage of uncertainty as of what the next stage should be. What I can tell you is that below 2080 we are going to have a very serious breakdown, and that will be the breakdown of this short-term trend line up that is in place. Below 2080 we're gonna break that, and if we break that we should drop straight to 2060 and then after that to 2040. So you want to put on your binoculars on and watch this 2080 very carefully. Once we break that, it's going to be a long-term break on the downside, and it will be quite significant. If they manage to hold above 2080, then we need to break 2100 even, and past 2100 we should shoot straight towards 2112, at which point we should encounter again significant resistance. Therefore, we can now bracket the market between 2100 to 2080, and whichever side we are going to attempt to break, coming from the middle where price is right now, that should be the side that should give us a successful break. If my guess is right, if there is any brain in the ravaged or cocaine ravaged brain of these SOBs in Wall Street, they're gonna take some money off the table, lock in some profit, especially after such a horrendous move on the upside, all based on hot air and phony baloney. So 2080 critical support, 2100 resistance, and price is now right in the middle of the two zones. So let's see from which side from the middle they're gonna go and attack. As for crude, that is another market that is now frustrating a lot of people, because OPEC came out, said they're not gonna decrease production, they're gonna float the market. Market is saturated with oil. Demand has dropped from all across the globe because every single economy out there is suffering, and at the same time it is just refusing to go down. Now, two things has to be considered here. Number one, that drop that we saw from $111 to the $40, this drop, this was just a nasty manipulation for whatever agenda that big money had. Was it to destroy Russia? Was it to damage Iran and make them negotiate? Was it Saudis bringing it down to destroy fracking in the US? Was it US doing this to punish Russia? Was it Saudi doing this to punish Iran with Syria? All kind of theories is floating out there. If that's what was a one-time event, one should never ever think again that crude would go down to $50, because for a long period of time, crude at $60 was always a fabulous buy. You remember a year and a half ago, 2 years ago, when crude would go to 100, 105, and then as soon as it would come down to $65, everybody was, wow, I'm gonna buy crude, it's dirt cheap. Well, it could be that crude is back to its average valuation, which is a fair $50, $60. And those $50, $40 that we saw down there, we shall not see it for a long while. If that's the case, do not expect anymore a cataclysmic collapse on the downside. If that's not the case, well, we need to exit this triangle that we are in. So far it has given a very nasty price action. Why? Because when it broke the triangle up, it trapped and failed, and this time when it broke the triangle down, it trapped and failed, and we are back again into this triangle. Now, as long as we are into this triangle, it's becoming very simple. We need to break above 60 to the upside in order to break up and possibly start a directional move on the upside, or we have to come and break this low here that we had recently in place in order to exit out of that triangle that I showed you again. So 60 to this low of 56.70 to 56.50, that's our bracket. Downside support 56.75 to 56.50. Outside we need, on the upper part we need to clear 60. And if my guess is right, we are going to churn within this range for some times before we decide to exit. As far as gold, I'm not gonna comment on it much, but as I told you, everything and anything and all things are only good for one thing: destroy gold. No matter what it is, no matter what it is. Economy good, economy bad, inflation good, inflation bad, dollar weak, dollar strong, good geopolitical environment, bad geopolitical environment, uncertainty, certainty, it just doesn't matter. There is an invisible hand out there that is out to just destroy day after day after day after day gold. And if I was a betting man, I would say that this invisible filthy hand is doing this on purpose to accumulate as much gold as possible, dirt, 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 cheap. And if I had to name one country among all, I would say China. I said China is behind that. So, in my opinion, for the time being, stay away from gold. It is a losing proposal. The swings are extremely unpredictable, extremely violent, extremely brutal, extremely random. When you have such conditions, you completely stay away. As usual, that's it for today. Thank you for listening, and I will see you all Monday. If you wish to join my trading community, you can get all my courses and 1-year membership to the room for $550 money backs guaranteed. Have a great weekend.